Good morning, traders. Today is January 15th, Sunday. Gone through 2 videos already. I seem to keep going over the same stuff. I'm going to highlight what's going on right now. This is the TTScanner video. So we're going to go over the TTScanner hot list, but I want you to be aware of what's happening over the next roughly 6 to 12 months plus. This is the ES chart. I'm going to open this up a little bit, and my analysis shows that we are going to enter a phase of fairly broad consolidation. Want you to be aware that we've seen this big downward move in 2022. We've seen this rally phase back up here off of this deep low. We're very likely to stay within a consolidated range, somewhere potentially between this level and this level down here, this support level, green line, right down here, for the next 12 to 15 plus months. Maybe moving up into new all-time highs in 2024 sometime over here. But ladies and gentlemen, we're going to see a fairly tight range over the next 12 to 15 months, I believe, kind of flagging out in this sideways formation. This is a line. Let me modify this. This is a line that I drew earlier in the videos, the first video I did, which was the real estate and MRM system. And this is a line that I drew just recently off of the SPY cycle patterns. And the cycle pattern suggests that we are going to see this type of trending. From these lows, rallying up, consolidating, rallying up, consolidating, reaching potentially this 4,400 level, consolidating into April of 2023, which is early Q1 earnings, and then move back to the upside in May, June, July. Now, the other thing I want you to be aware of is we're moving into an election year cycle. So we have to be very aware that back over here, I can do this efficiently, back over here in November 2024, where that line is, we're going to have a presidential election. And then over here, January 20th, roughly, try to get my mouse there, we're going to change presidents, potentially. So we have, in the long-term cycle of things, prior to elections, and these become critically important. I'm going to try to mark these bluish and thicker, and I will mark this purple and thicker. These become critically important dates, okay? Just like we saw in 2015, and just like we see pretty much every election year, the 15 to 18 months prior to an election year, it is very likely that the market's going to move into an undecisive, sideways, consolidated phase. This means that we could stay in a sideways range, ranging between up and down, between, say, 5.5% and 15.5% range over the next 15 to 24 months. I want you to be aware that this is very, very likely to happen. So all of these doomsayers and crisis sayers, unless there's some sort of a catalyst event, I think we're going to stay in this sideways consolidation phase. We could see a couple of blips to the downside. That would be minor crisis events where we could see a pretty big 10-15% downside move. Then we will recover just like 2015-16. Then another blip potentially, and then we should recover. And these could be associated with the presidential election, fallout from, whatever. Could be global credit market realignment or austerity measures. Could be any number of things, but the real reality is I believe we're going to enter into a fairly solid recovery phase over the next 5-6 months back up into this area, 440, let's call it 425 to 440 on the SPY. That would be 4250 to 4400 plus on the ES. And then we'll likely move into some consolidation phase, potentially moving sideways. And like I said, we could have a 7 to 12% range over the next 12 to 15 months. This means that we're going to see a lot of rules-based trading systems get chewed up. And when I say chewed up, I'm telling you, you could be looking at 20, 25, 30% drawdowns for many rule-based trading systems. We need to stay cautious. Precious metals are going to act as a hedge. It's going to be an austeric kind of a moment for the next 12 to probably 48 months, where global economies try to remove debt credit excesses and move back into a net positive. We could see commodities rally. We would likely see gold, silver rally, platinum as well. We may see some movement in foreign markets. We would likely see a reversion trade in technology and innovation. But understand that the real reality here is that for the next 12 to 24 months plus, we could be into a consolidation phase, which I've highlighted here. And then, without trying to get too crazy, we could enter back into this phase that I've drawn many weeks ago. Attempting to reach these all-time highs again back up over here. Now understand that we enter into another presidential cycle phase back over here. The election will take place in 2028. January 2029 will be the swearing in of the new president. So the next election will be November 2028, roughly right there. And this is a fairly good roadmap for what I expect to happen. It may seem like there's a lot of information on here, but understand that, you know, if I were to try to, again, draw it out, remember, follow this green line here. This is really kind of important. Once we get in this post-election time frame, we should see potentially see new all-time highs. We should see movement back up into a Wave-5 rally peak, up into this area, moving into some consolidation. Consolidation normally takes place 16 to 24 months prior to an election. So in that regard, we have a consolidation phase, which is likely to take place roughly in this area prior to the election. And I will highlight this in yellow. So here we have our election cycle phase. Here we have our major cycle phase peak, roughly 2027, 28, 29. I've drawn it with this blue box here. But in reality, ladies and gentlemen, we're going to see a reflation cycle trade up to around 4,200, 4,300, 4,400. Then we'll likely see some consolidation moving through the first cycle, first half of the year, the summer of 2023. Then potentially move upwards into the end of 2023, into 2024. Maybe some consolidation into the first quarter of 2024. Then a rally phase up into 2024, attempting to get into new all-time highs right over here prior to this election, maybe consolidate, and then start to move upward out of this cycle. So the real reality here is we've got 5 or 6 or 7 years of navigating this trend. And the real opportunity comes in positioning in late 2023, 2024, in this time frame, for what's likely to come out of this next 4 or 5 years. So at this point, we're staying cautious. We have a good opportunity for the next 4 or 5 months up into April, May, June. Then we're going to enter some consolidation. Then we're likely going to see some upward movement into end of 2024. And then we're going to see some consolidation here. But this area if I can draw it like this area here presents some really big opportunity, and this area here presents some really big opportunity. So here, and here. Now, honestly, I love going through and doing this stuff with you guys. This is what I do. My new saying is, I do the research, you make the decisions. Okay, and that's exactly what I'm trying to do for you. Ideally, I'm doing all of this research. I've got 25, 30 years of studying the markets, cycles, predictive analysis, adaptive learning, AI, and others. And the reality is I'm giving you the best guidance I can, and I'm not doing it, 3, 4, 5, 10 days in advance. I'm showing you 2, 3, 4, 5, 6, 7 years in advance of what is likely to happen. Now, I want you to understand that I'm going to live or die based on this analysis, but I have been doing it for years, and I have been very successful in guiding people through this and showing you what's going on. I use all the tools available that I have to make these decisions, and I'm going to give you the best advice that I can because I want you to learn to trust my analysis and time your trading activity around when the opportunity exists in the market. Remember, historic teachings, Japanese candlestick teachings, which is really when I got started in this in 1987, 88, 89 with my ex-partner, Gary Wagner. My first foray into understanding the markets was building an artificially intelligent pattern recognition system for Japanese candlesticks. Part of the teachings of the Cicada's 5 methods is that traders will typically be on the sidelines 60 or 70% of the time if you are trading and swing trading longer term market trends. You're waiting for the opportunities to set up and then jumping on them. That means that in reality, you could be sitting on 60, 70, 80, 90% of your cash for 60% of any given 12-month time frame, waiting for the proper opportunities to set up. When they set up, we pounce on them. We try to make the best of them. So let's get into the TTScanner images, and then I want to highlight what's going on going forward. So the TTScanner images, we are going to go through this week's TTScanner image here. This is the value TTScanner hot list. You can see we've moved to bullish in quite a bit of these scenarios. We've got one new trigger from last week, which is Apple. We're off 3.29%, it looks like. We are holding this trigger. It has not, it's a short. We've not gotten out of this move yet. This could actually flatten out depending on what earnings say. My personal belief with Apple is they're going through a restructuring. So I'm expecting fairly weak numbers comparatively. Might push Apple a bit lower. Intel back here is still short. We've got 22.54% in this trade. We've been holding it for 28 weeks. We've already hit our first targets, and our stop is well below our entry price. The other ones here, Travelers, let me get out of the zoom mode and try to get to here. The other is CVX, Chevron, which is 53 weeks old. We've got 51% profit in the trade. Travelers, we've got, it's 10 weeks old. We've got, looks like 660 profit in the trade. MRK, Merck and Company, 9 weeks old. We've got 13.96, looks like profit in the trade. SJM, Smuckers, 7 weeks old, 7.47% profit in the trade. And Caterpillar, 3 weeks old, 10.50 profit in the trade. New flat triggers, Hasbro, Calavo Growers, and Salesforce, Southwest Gas Holdings, and Disney have all gone flat this week. So these were trades that did not follow through. The system got us out of the trades. The capital is now back in our account. We're not risking anything on these trades. We'll be waiting to see how this plays out. Remember, the markets are really sideways. So without any real trending, these weekly signals are either going to stick and we're going to ride them for a bit, or we're going to get out fairly quickly with minor losses. Okay, next we have the TTScanner, the regular TTScanner Hotlist. We have one short trigger down here, US Technology, 1 week old, minus 4% on the trade. Haven't hit any targets. This is again from last week. We have a new trigger this week in ITA, a long trigger. We're off 1.45%, have not hit any targets. We have a flat trigger in Nugget, NUGT, got out of the trade this week. And then we have a Spider oil and gas long from 48 weeks ago and XLE long from 52 weeks ago. Now, as I've been warning, oil is consolidating, and oil is likely to try to move back down below $70 a barrel. It is consolidating because we're seeing, even though we're seeing the Chinese economy reopen and other kind of economic data, economies strengthen, we're seeing a general austerity measure throughout the world and the U.S. And that means we're going to see some interesting trends in oil. Oil will eventually move back higher. That may be in 2024, maybe early 2025, but in the meantime, I expect oil to consolidate. The one thing that could change with oil is that if we enter into a war, or if we enter into some sort of let's call it disruption again, like a COVID or other type of pandemic, we could see oil really dislocate from current trends. But generally, I think the austerity measures that are going to take place over the next 12 to 24 plus months, plus the election, is going to move oil kind of to consolidate around 62, 64, in my opinion. So again, we're not getting any great triggers here. This aerospace defense bullish trigger could turn into a good trigger. This iShares technology short trigger, I think this is probably going to end up taking a small loss and getting out flat. We'll see how this plays out, whether or not we get a big dip in technology or not. What I'm seeing is we're already seeing in the custom indexes a kind of reflation setup. So this could be a false trigger or end of trigger setting up. We also have a flat here in consumer discretionary. Okay, so next we come back over here to the core index. This is the core inverse index. We have one short trigger in China bear. That means that the Chinese economy is reflating. This is a short in a bear market. In a bear market, we would expect to see this moving. If the bull market was taking place, this would move into a short position. If a bear market was setting up in China, this would move into a long position. So we've got a new short trigger here that's showing us a reflation trade, a new upward trade in China. You can see the emerging markets here went flat. We had negative thrust over here, which is indicating downward price trending. You can see pretty much everything is bearish. We have no new triggers here. This could be, this China trade could be a pretty good trade setup. Let's go see over here into the core index if Yang, where is Yang? It's not on this chart. Okay, we'll take a look at it. But you can see here we've got a number of existing triggers, a bunch of shorts in QLD, likely to end up getting out of this trade. We're minus 8% on this trade. We're plus 1.47 here, plus 31% here on ARKW, plus 40% here on MJ. These are longer term trades. Minus 3.3, minus 8.7 on ARKK, minus 6.72 on ARKQ, minus 7.5 on Hale, and these are longer term trades, plus 43. Now remember, this is really, if you're following my advice, you should be trading a very small portion of your capital right now. So when you see this minus 6, 7, 8% trades, these should really be minus 0.7 or minus 0.35 if you're cutting them. So hypothetically, you're trading 20% of your capital broken into 10 or 20 trading slots. That means that each one of these outcomes is really 1/10 or 1/20th of these outcomes. That means that minus 8.7 is really minus 0.87 or 0.45 5 roughly. So they're very small percentages, 0.5% or maybe, 0.8%. And here it would be minus 3.3. Do the math real quick. That's minus 0.33 or minus 0.15. So these are really 1/10 or 1/3% losses. Same thing here. This is a 40% gain. Okay, that's great. Except in reality, that's a 4% gain or a 2% gain if you're trading 1/10 or 1/20th of the allocation. So in reality, you can still trade, but the numbers have to be put into perspective. These are reflective of 100% in on the capital we put into this trade. But in reality, compared to our total portfolio, if you were to sum all of this up, by my estimation, you'd be up about 2.5% maybe over all of these trades over the lifetime of this trading system or these algos. So again, we're getting a lot more bullish triggers. Some of these bearish triggers will eventually flip out into flat and bullish trends eventually. I think, honestly, the ARKK, the HACK, the QLD, the HALE, ARKQ could move into bullish trends, meaning we could see these flatten out and move into bullish trends, depends on what happened. But again, right now, you should be staying safely protected, following the allocation levels. Now let's go back over here to the allocation levels. You should be only trading 20% of your capital into stocks. That's for all active stock discretionary trading. You should have 55% in cash, 25% in metals, and 0% in bonds in the standard allocation level, or 20% in stocks, 80% in cash, 0% in bonds in the alternate. Remember, you would take this 20% allocation level, break it into 10 or 20 trading slots. That would give you the ability to trade discretionarily however you like, but your risk factor and your profit factor is very contained. The real strength of this portfolio is that you can trade this 20%. You're hedged effectively 55% cash. You're hedged effectively metals 25% here. So while you're protecting 75+% of your portfolio, 80% of your portfolio here, you've got 20% that you can play with. And in reality, by doing so, taking discretionary swing trades, you're really only looking at risking 3 or 4% over, say, a 12-month time frame, hypothetically, or maybe making 3 or 4 or 5% over a 12-month time frame. You're very effectively hedged. You can trade, you can take advantage of gold or silver, emerging markets, whatever you want, but you're essentially hedging your risk. Your risk, if you were to take a 10% loss on 20% allocation, you're still only taking a total loss on your portfolio of 1.8 to 2.0%. That's nothing compared to some of these other systems that are risking 30, 40, 50% of your portfolio at this time. Okay, so again, we're looking for the markets to move into this sideways trending, and I need to point out the right here, the real reality of the SPY cycle patterns. The cycle patterns, we're currently just past this major crush pattern here. We get into gap potential breakdown. So on Tuesday of next week, on the 17th, we get a potential breakdown pattern. Then we get a pop pattern, which is normally to the upside. Then we get a nothing day, then a base rally, then a breakaway, then rally, then carryover, then inside breakaway, harami day, crush pattern, which could be big up or down, probably to the upside. Then we get a reversal rally, then nothing, nothing, inside breakaway, breakaway, rally, rally, carryover, crush again, up or down, reversal rally. So we have through all of January and most of February here a lot of bullish trending. We start to run into topping patterns here, actually that's it. One top scenario here, and then we get into rally, rally, rally mode through the end of February. This carries us into March. Gap reversal, breakdown, breakaway, carryover, crush. then flat down, momentum rally. See, we're carrying the rally into March. Breakdown could be a breakdown day. That could be a one-day downward move. Rally, then we get a top. Then we get breakaway, rally, weekend gap, top. This is into late March. And then we start getting into these topping formations. You see here, March 30th, top. Right here, April 3rd, top, rotation. April 7th, top. This is the end of Q1, beginning of Q2, moving into earnings season. And I believe we're going to see some rotation near the end of March 2023 and into early April 2023, meaning we're going to see some consolidation, some rotation, some concern with regard to the U.S. economy and or earnings capacity. So be aware that we have a fairly solid rally phase taking place. Then we get into this April topping formation, and eventually it kind of settles and moves back down into momentum rallies down here the second half of April and likely carrying over into May. I'll update these as we get further along. But what that means, ladies and gentlemen, is if I were to drag this back over here, perfect, and spread this out a little bit, what that means, ladies and gentlemen, is we're looking at this type of activity for the next couple of weeks. So here we are. Here's our bottom in October. Here's where we are right now, trying to break out of it. Follow this yellow line. This is what I think is going to happen based on my SPY cycle patterns. We're going to see a fairly solid melt up. So if I take and draw from where we're at up to here and try to get the distance, about 11% rally up into this 440 area, this purple line area. Then we move into the end of March right in here. We're going to be topping, rolling over, potentially seeing a 4 or 5% downside move into figure April 20th, April 25th, and then begin to rally back up to the outside. Now, we could see a sideways kind of a summer here, which is what I've drawn here. We could see kind of a sideways summer move in this area. Then we could see some catalyst move right here, which is why I had mentioned in the other video that the real reality is being able to take advantage of these moves. So right now, we have a fairly solid opportunity. Come on, mouse. We have a fairly solid opportunity right in here. Right where we're at right now, we have a fairly solid opportunity to potentially see a 7, 8, 9, 10, 11% rally up into end of March. Then we have to be concerned about this next move over here. Then we have another opportunity potentially kind of in this area right in here to see a potential rally phase through the end of 23, moving into 2024, which is right over here. This is another rally phase where we could see, hypothetically, if my levels are correct, we could see a move here of another 13, 12, call it 10 to 14%. Then we have another opportunity where this green area is, and that gives us the opportunity here for another potential rally phase, potentially up into this area, and that would be, trying to get my mouse to cooperate here, potentially another 15 to 20% rally phase. So again, using my research, trying to give you the ability to determine how to make decisions for yourself, we have a opportunity right in this area if we see a reflation trade to potentially catch from the current levels up to highs, maybe 8-9%. Then we need to stay cautious from April into potentially October, where we could start to become a little bit more opportunistic with regards to a rally phase into November, October, November of 2024 of maybe 10 to 12%. Then we need to stay cautious into the early phase, possibly into April, May, June of 2025, which may lead us into a rally phase of maybe 15 to 20% up to these peaks here in 2026. And at that point, we're going to set up another opportunity zone back over here in October, November, December of 2026, which may be the final phase to the peak. So again, I'm trying to use my best judgment here. You can take it for what it's worth. Okay, I'm showing you what's likely to happen, in my opinion, and I will, of course, update this if I see new things come. But long and short of it, I'm showing you where the opportunity is, how to profit from the markets, and why it's so important to follow my research. How am I able to see this far into the future? Well, I've got a ton of years experience in doing this. I've done all kinds of research with regards to cycle patterns, daily, weekly, monthly, yearly, presidential elections, Fibonacci cycle timeframes, Tesla, GAN, you name it. And what I'm telling you is that I believe this is the most likely outcome right now. Just like I've been telling you that this is a wave 4 correction, we're likely to bottom and start a wave 4 rally. Just like I've been telling you that we're likely going to have this wave 5 rally continue to take place until 2028, 2029, which is this area right here, and that the peak in that move is going to occur up here 6,600, 6,700, and roll over prior to the previous election or the next election cycle in 2028. It's very simple, guys. The way I see the market is opportunity, allocation, Fed movement, central bank movement, expansion, contraction. I use my custom indexes. I use all of my resources to try to guide you. And really what I'm trying to do is show you that the opportunity is here. You just need to stay patient and wait it out. That's what I'm trying to do, show you with my MENT Rotational Modeling system. We're going to stay opportunistic. We're going to protect our capital, and we're going to ride the next big rally phase that sets up. Looks like the current rally phase has got a 6, 7, 8% reflation trade, which may translate into 18, 20, 25% in technology. But the next big phase, ladies and gentlemen, looks like it's going to happen back over here. Summer of 2023, so let's call it June, July, August, September. That's going to be a real opportunity zone for us. We'll see how the risk factors set up, and then that next rally phase could see us move to new all-time highs, which could be another 30, 40% in technology or more, maybe another 12 to 15% in the general U.S. markets as well. Then we move into a consolidation period through the elections and after the elections. And over here in March, April, May, June, we could see another opportunity zone to catch this next wave higher. Okay, guys, follow my research, share it with your friends, understand that I really want to help you, and there's some big things coming. Part of what's coming is this new setup over here, which is the new TTScanner intraday swing trading setups. Very strong setups taking place right now. This is for people who want to be a lot more active. I'm thinking about setting this up as a separate service. Let me know what you think. Pause the video right here. Take a look at all of this data. These are running on 30-minute charts. They are quantitative modeling, adaptive AI. Adaptive AI means that it learns as it goes, tries to adapt to the market. But the whole idea is if we're going to enter into a sideways phase of the market for the next 15 to 20 months, we need to start looking for opportunities in the broader scope on a shorter term time frame. All right, guys, hopefully I'll get your feedback and you guys can see what I'm doing. Remember, we have a really big opportunity setting up here with these cycle patterns. Last week, I had a client write me and tell me that, you were 100% right on every day last week. Yeah, sometimes it gets like that. You know, these are mapped all the way out to 2029, and I can continue to map them out as far as I want. It's really quite simple, but this is something that I've done proprietary for you to be able to see what's going on, and they essentially operate like a roadmap. I like to consider them as like candlesticks. By looking at the context of what I'm reading in the sentence, think of this as a paragraph to the end of paragraph, then a new paragraph to the end of paragraph, then a new paragraph till the end of paragraph. So this is basically base rally, breakaway, rally, carryover, inside, breakaway, harami, which means a flat day, crush could be a big day, and then reversal rally. If I read that as one paragraph, I'm seeing rally, breakaway, rally, carryover, inside, harami, crush, rally. So overall, that 5, 6, 7 day time frame is pretty much biased to the upside. Can you understand that? It basically reads like a sentence or a paragraph to me. Same thing here. Inside, breakaway, breakaway. Both of those are to the upside. Rally, rally. Both of those to the upside. Carryover means following the trend of the previous 2 or 3, 4 bars. And then a crush. Okay, that could be a pretty big downward day or a pretty big upward day, but either way, it's going to be a pretty big day probably. Then a reversal rally. So rally, rally, rally. Potential concern for one day near the 4th, and then we get a reversal rally. Generally, that paragraph is generally quite bullish. Okay, guys. Hope you enjoy. Follow me, and like I said, let's make some money this year. It's going to be a great year. Talk to you soon.